You're listening to the Fully Booked Therapist with Heather Hommel. This is the business coaching show for hands-on therapists who are done under-earning and ready to build a practice that pays them more than enough. Real conversations, real results, your real life. Let's get into it. Hey, everybody, and welcome back to another episode of the Fully Booked Therapist with Heather Hommel. Today, I have a special guest. I have with me here Hallee Literal. Hallee is from Insight Tax, and she is a tax professional. Hallee, why don't you kind of tell us a little bit about your background and, of course, welcome to the show.
Thank you. So a little bit about myself. I am an EA with the IRS. I've been doing taxes since 2015. So this was my 10th tax season I went through. I started doing taxes at a Liberty Tax, so a very small mom and pop shop. And now I'm working with a company in Utah where we have a vast majority of clients that range from real estate investing, massage therapy, anything under the sun, really. We deal with all types of clients, people who are just starting all the way up to established businesses. And the reason why I decided to get into the tax field is I believed a lot of people don't get that education. So I like to walk my clients through how taxes actually are calculated and help them understand what expenses they can take and what they need for their taxes, and just make the process a lot smoother so they're not stressed out during tax season.
Mm-hmm. I love that. Okay, so let's get into how this applies to people like bodywork therapists, hands-on therapists that are listening to this now. So when a bodywork practitioner first goes out on her own, she's opening up her business, what are the first 2 or 3 tax moves she should make before the clients even start coming in?
Yeah, that's a great question. So I recommend starting an LLC, a sole member LLC with an EIN number. That way she could register. She could apply for a business bank account is the next one, because you want to keep your business funds separate from your personal funds. The third is acquire any business licenses. So with massage therapy, you could need specific licenses or insurance to get that. You will need your name and EIN to get those, as well as some cities, they require a city license or a business license to operate in that city. So just acquiring those licenses and insurance that may be needed.
Perfect. Okay, what do you think is the most common and costly mistake that you see new hands-on practitioners make in that first year of business?
Yes, I would say probably time and burnout with a little bit of cash flow management. So the time and burnout, thinking that you need to do everything yourself when you could reach out to maybe another therapist that you've gone to school with, ask questions and see what they're doing different from what you're doing. And then overbooking themselves potentially, maybe the price, they're underpricing what they should be charging. And then cash flow management, I would say, would be knowing the actual cost of running a business. Maybe you have to rent an office space that comes with utilities, maybe additional insurance on top of buying the equipment, the tables, the oils, everything you need to run your business. So just making sure you're set up to buy all those things if you are going to a place of business, having those all lined up and know those costs ahead of time.
Yeah, I like that. And I just want to reiterate something you said earlier, which are some of the first moves you should make. And that you recommended the LLC and the EIN number and the setting up of business bank accounts. And that is for anyone that's running out of their home or renting a space. We've got to treat these businesses as businesses from the beginning. I think that that's always just a good, clean place to start, no matter how high or how low your overhead is. So just want to point that out. And then I am the go-to for therapists that are starting their businesses to make sure that they're not undercharging and overworking that creates that burnout that happens, or that frazzledness of I don't know what to do or how to do this. And people think they can just slap a shingle up on the door and call it good and call it a business. And there's a lot more to that. I think that works out for some people, but I don't think it's as clean and smooth as it could be.
Yeah, definitely.
Yeah. Okay. So at what point do you think a bodywork business owner should stop using something like TurboTax for their taxes and invest in real tax help? What's like the tipping point
Yeah,
there?
I mean, really personally, I would recommend right away because using a TurboTax or a tax software online, maybe it's the free version, automatically when you add a business, you're going to get charged for that tax form anyways. And with some of those softwares, I don't think they're very user friendly. So it may not point out like all the different expenses you're able to take and utilize. Maybe it only gives you like 3 of the 20 that you can take. So I feel like using those softwares, it's not as small business friendly as they could be. So I would recommend reaching out to a tax professional right away, even maybe even before you start getting clients, making sure you know what deductions you could take ahead of time. And that way you have a good head on your shoulder. So when that first client walks through the door, you're not overwhelmed. You know what to do, you know what expenses you can take, and you're ready to go.
Okay, I like that. Do you think too, if you're using TurboTax, like it's fine to get your taxes done, but you could be losing money on it? Like it seems like you're saving money because it's maybe a cheaper option, but you're actually losing money if you're not getting all of the business deductions that you qualify for.
Oh, yeah, you can definitely be losing money because if you're not getting those deductions, your taxable income is higher, but also being self employed or getting 1099s, you're being taxed self employment tax as well. So when you don't have those expenses to reduce that taxable net income, you're going to be taxed self employment tax on that net income, plus your taxable income will be higher. So there's two additional taxes that can help that will actually increase how much you owe, as opposed to if you went to a professional the first time, you were like, oh, I didn't have to pay that much money. And sometimes, even when we get transfer clients, we as a company, we go back to their last 2 tax returns and review those returns to make sure everything was utilized the best that it could. And then if we need to do an amendment, we could do the amendment for the client to help them for that.
Ooh, I like that. Okay. That's something to keep in mind, listeners, is if you're out there kind of hobbling this together on your own, we just completed tax season for 2025 as we're recording this episode, but be thinking about how do you want to experience tax season next year? And you can be planning for that now by making a contact here. I'm going to leave all of your information in the show notes too, so people can look you up and get your expert advice. But so good to be planning for next year already so you can have an even better experience of tax season, because I think it can be a fun experience. Like I'm starting to really enjoy tax season to see like where we're at and how things are going. So maybe not
Yeah.
everybody agrees with that, but I'm a nerd. So
And one other thing with my company Insight we work for, depending on when you sign up for us and get our package, you do qualify for a tax plan meeting. So in that tax plan meeting, it can happen throughout the year, but you get assigned a tax professional where we're going to sit down, collect the income and information up front from what you've made so far, what you project to make, and we'll even go through different tax scenarios or strategies to help maximize the best cost savings and the best tax strategies for when we go to 26 filings. You're prepared ahead of time. We already did the tax planning, you know what to expect. And that's a great place too to also ask your questions. So maybe there's something that you're not sure is a deduction, that you've heard about it on a social media stream and you're like, wait, is this real? You can ask your tax professional like the pros and cons of each situation.
I love that. Okay, let's talk about S Corps. This seems to come up a lot for my clients, my Facebook group. So, when does it actually make sense for a solo practitioner to declare the S Corp or to become an S Corp? And what is the downside of doing it too early?
Yeah, and that's a question we get all the time as well. It is very dependent about what everyone's tax situation is. Are they single? Are they married filing joint? Do they have children? Do they have additional W-2 income that they're claiming as well? So this will vary based on everyone's tax situation, but usually we would say a net income of 15,000 to 20,000. If you're netting that much, that's going to be an additional 2,200 to $3,000 of self-employment tax on top of the tax bill. So usually at that point, when it's about 2,000 to 3,000 of self-employment tax, looking to switch to the S Corp where we're saving money on self-employment tax and additional, there's costs with an S Corp, but usually that 15 to 20,000 of net income. So after all your expenses, that's going to be a good point to sit down with your tax professional, go through your situation and see if it is the right point to move forward into that S Corp transition.
And I think that's important to point out. This is your revenue minus your expenses, and you're having, did you say about 20,000 in profit
Yes.
beforehand? Okay. That's good to know. What do you think? What happens if someone converts to the S Corp before they're ready? What does it cost?
Yeah. So it does cost. And again, depending on who the client uses as a tax firm, the prices can vary. Some firms charge more, some charge less, but the actual transition of the S Corp, it's not necessarily too costly. You
Yeah.
have to fill out a form at the IRS, send it off to the IRS, and wait for that approval letter. But what comes up is it's a separate tax return. So that tax return has to be done first. It is called a pass-through entity. So there's no tax due at the S Corp level unless it's a specific state. Some states charge some fees, but there's no tax due at the S Corp level. The net income passes through to your personal, and that income is allocated to whatever your income tax rates are on your personal and all your other tax situations on your personal. So I would say probably the big downside would be that additional cost of how much it actually would be to do the S Corp tax return, whether it's a monthly cost or you pay for it when you go and get that return done. So just pricing out your different firms, seeing what the costs are at each one. There is also a payroll side to an S Corp. So you have to pay yourself a reasonable wage, and that's what you pay self-employment tax. So that payroll cost is also a factor in determining if I need to make that switch or not.
Yeah. So it's like, okay, you've got this 20K in profit, and can you also pay yourself?
Yeah. So
Yeah.
usually with the 15 to 20K, that 2,000 to 3,000 of self-employment tax, that's usually enough to cover the extra cost of like having the S Corp tax return, having the payroll company, and still coming out on top, saving money on that self-employment tax. So usually that's kind of like the middle ground.
Okay. Very good. Very good. Okay, let's talk about quarterly taxes next. This is also a very hot topic. Is it okay to skip quarterly estimated tax payments when you're just getting started?
Yeah, so quarterly taxes are always a fun question. And just to lay out the land beforehand, there's two
Yeah.
types of quarterly. There's quarterly estimated taxes, which are to prepay your income taxes. Then there's quarterly filings when you have a payroll obligation for the S Corp. The quarterly filings are where you pay the self employment tax throughout the year as opposed to on the tax return like you would have previously. So that I think is a big confusion too with a lot of clients. So there's two separate things, the 941 filings and then the quarterly estimated income taxes. But what you need to do is if you skip, you could be assessed a penalty depending on how much you actually owe. Now, again, there's ways to avoid the penalty. You can do the safe harbor method where you pay 100% of the prior year liability. But again, starting a new business, you may have losses from that business the first year. Therefore, your income's not going to be the same. So you can make estimated payments. Sometimes, even if you owe less than $1,000 of liability, you're not going to be penalized and not owe those estimated tax payments. So, really, what I would recommend is talking to a tax professional, letting them know, like, hey, I'm starting my own business. Maybe I don't have a lot of income, I have more expenses, but this is my other situation for my personal, and having them weigh out and see if you need to make those payments or not.
Okay. Great. Great. I think it's going to help a lot to talk to someone and get these answers versus just guess and
Yeah.
then like be afraid all year. Like, am I going to get in trouble? Or I hope I don't get in trouble. All those things. Just
Yeah.
much better to, I think, know your facts and data and make decisions based on that.
I
Always.
completely agree. Yeah.
Yeah. Okay. So, what is your advice on how a practitioner should think about setting aside money for taxes? Let's say that she hasn't talked to a tax professional, but she's savvy and she's smart and she knows her facts and data. She kind of knows how much money she's going to make, but how should she set aside money for taxes when like her schedule and the revenue are maybe inconsistent month to month?
Yeah, that's a great topic too, is when you start out with a new business and you have all these expenses up front, but then you start bringing in that first client and you're like, wait, am I really going to owe taxes or not? One good way and good practice is setting aside 15 to 30% of the revenue and putting it into a separate savings account. You can put it into a high yield or whatever type of savings you want, but putting that money aside for tax purposes. Now, I would recommend leveraging a tax professional where you can then talk to someone. So maybe you're setting aside that 15 to 30%, you talk to the tax professional, maybe you only need 20% of that. So you can move that money around, but at least 15 to 30 so you're not hit with that big tax bill because again, you are going to be subject to self-employment tax and income taxes.
Mhm. Good advice. Good advice. Okay, so from a tax perspective, what changes when this bodywork professional crosses 100K in revenue? What strategies open up that were not available before?
Yeah. So the first one is if you're not an S Corp, make that S Corp. And again, like let's say you don't think you're going to hit that 100,000 mark by the end of the year, but you hit it in August. Reach out to your tax pro, start that paperwork to switch over to the S Corp. You can do it throughout the year. Usually, to get guaranteed acceptance, it's January through March. We have to have that paperwork in, but you can still transition April to really December. We like to do a little bit beforehand, but really till December. And what we do is a 2553 Rev Proc. So trying to get the IRS to accept that S Corp election.
I
But
didn't know that. That's cool. I think a lot of people are told like if you don't do it by March 15th, like you're just out.
yeah, no, you can still do it. Sometimes the IRS will send you a letter saying, oh, we want more documentation, so on and so forth, but you can still get it elected. We like to do it November at the latest, but you can do it until December. But yeah, if you're making more money than you thought you were going to, reach out to somebody, get that S Corp created. Some other strategies that you can utilize are retirement accounts. So setting up a solo 401k. When you're an S Corp, you're able to create the solo 401k where you can contribute as the employee and employer. There's other retirement accounts you can invest in, like the SEP. Some different strategies we like to utilize at Insight are maybe hiring your kids or your spouse to work with the S Corp for you, paying them a wage. And then the corporate rent or the Augusta rule strategy is another one that you can utilize on the taxes.
Okay, very cool. Are there deductions or write-offs that solo practitioners are consistently overlooking that you know about?
Yeah, so I mean, this is for everyone in starting a new business. We have a spreadsheet that we like to send out to new clients, but specifically in your field, maybe laundry expenses. So getting the linens cleaned, music and streaming subscriptions, again, cleaning and sanitation. Maybe they have a cleaner come in and sanitize things. Maybe they send off equipment to go get sanitized and bring it back. All those small equipment, furniture, and decor. Sometimes those get overlooked, like, oh, yeah, I brought this picture and this decor, these accent lights. Some of those often get left off as well.
Can I ask you one thing? Because this is often a hot topic, is therapists getting their own treatment. Is that a write-off?
This one is, I would say, a gray area, but if your muscles are tight, tender, and you need to be relaxed, or like maybe you have a knot and you need it, you could utilize it as a business expense. The IRS says anything that's ordinary and necessary for you to conduct business is an expense. So maybe you have a medical situation where you have to have physical therapy and so on and so forth. Those things, you can justify those. I would just recommend keeping your receipts, documentation, and everything to help outline those expenses.
Okay. That's actually good news because I think there's a lot of therapists that do that. You know, maybe they get a treatment every week because that keeps them in tip top shape to be able to see their clients. And if they're not in tip top shape, they can't make money. So that's good to know. So document always. And then I guess be prepared to not write it off if for some reason the IRS comes back and says, no, you can't do that.
Yeah. And then another one we get all the time is like uniform. So if it's a branded attire or specific shoes that maybe have more support, those can definitely qualify. Now, if you're just buying like leggings and a t-shirt, again, that's a gray area. How aggressive do you need to want to be on your tax return? But usually branded attire, you can write that off. So if you have a logo that you've created, you can put a sticker or get it embroidered, have that on a shirt, and then that could be a write-off for your business.
Okay. Very interesting. Let's talk about kind of systems and cash flow now. So, what bookkeeping or financial systems do you recommend for someone who's still doing everything themselves?
Yeah. So, I mean, just as simple as having an Excel file. and keeping track income and expenses. We have one at Insight that we'd like to send out to clients for the new businesses just getting off the ground, but also QuickBooks, and there's other bookkeeping softwares out there, but QuickBooks Online, and they have different services and options you can do, but they have great customer service. They're usually setting up the accounts, linking the bank accounts. It's very user friendly. So I would say at least an Excel file where you're putting everything in categories. And then if you have it broken out per month, that's great as well. But an Excel file, if not a bookkeeping software.
Okay. This is not a question we predetermined we were going to ask, but I'm just curious. Can you explain the difference between someone going, like just having an accountant do taxes versus having tax advice, right? Because that it's not the same thing, right? Not all accountants are going to give tax strategy and tax advice, but your company does do that, correct?
Correct.
How do you know what you're getting, I guess, when you go in to do your taxes and the difference between those two types of tax return filings, I guess?
Yeah, so just from my own personal career growth at Liberty Tax, I was just getting into the tax world. People would come in off the streets, I do the return, send them out the door. So places like that, and not to say they're not great places, they still get taxes done correctly, accurately. You go through schooling, but places like those, even like the online software is doing them yourself, like you're not going to get those tax strategy meetings. Now, when you go to a tax company and they offer all the different services, but they offer the tax professionals that you get assigned to, it would just really be asking questions and seeing what they offer. But usually at a bigger firm, they offer those tax strategy meetings, strategy sessions, and they're going to do your return, but they can also add in advice of what to do to help prepare for this next year. Because usually when it comes tax season, it's February through April, you come in to do your taxes. So kind of everything's kind of locked in stone from what you did the previous year, but they could also help you prepare for next year.
Okay, great. And you don't have to be rich in order to do tax strategy or tax planning.
No, so at our company at Insight, we offer the strategy session, one strategy session free with your monthly subscription. So some firms offer it for free with the subscription. Other firms, you pay for it out of pocket. But just asking those questions up front, all they can say is no or give you a price. And you're like, no, thank you. You can always turn down the price. You can always shop for somebody else. Like, don't feel like you're stuck. And depending on if you sign a contract, maybe there's legal obligations there, but you can always shop and get those different prices and ask questions.
Yeah, I think being prepared to ask, like to know what to ask, is also a problem because I think when it comes to money, especially for women, we can feel like we're behind the curve or we just don't know what to ask or we're not smart enough to know or we should just already know when like nobody ever teaches you this anywhere along the line of just even running a business unless you're actively seeking the information out. You just don't know it. So it can be intimidating to show up and ask these questions. So I just want to encourage everybody to ask questions, ask your friends what they ask their tax professionals, and really be clear about what your goals are. And you may start out with, I have no idea what my goals are, but you also might be like, oh, I want to like have a 10% tax savings this next year. Okay. You can go in with that and say, how can we find this in my tax return or something like that? Does that sound like something someone could ask?
Oh, yeah, definitely. And then from kind of what you were saying, like the unknown, not knowing where to start, where to even go from just searching different things on even Google, ChatGPT, like different AI programs, like they kind of spit out a lot of information of different things you can ask now. But yeah, always asking a friend or maybe a local practitioner you went to school with, asking her, hey, what are you doing? What is different here? Like, what should I be asking? Definitely asking questions, I think, is the biggest thing. And like you said, women, we should know these things, but we don't. And it's scary to not know them. So asking the questions, even like if it's your friend who maybe runs a different business, you could still ask them questions and ask them, what did you do for your business? How did you set it up? What insurance did you need? Like just asking the questions is a great starting point.
Yeah. I think it's great to have questions and to just make them up until you get to the point where you want to go,
Yeah.
clears it up for you. Okay, so you guys work with the profit first framework. I'm a little bit familiar with that, but not super familiar. How does that approach help a practitioner who has inconsistent session volume and is trying to build stability in their business?
Yeah, so what it is, Profit First, it's a percentage allocation system. So when there are slower months, you're still setting aside a certain percentage of the income you do bring in. And you have that built up money from maybe those stronger months you could rely on to pay those expenses. But basically, it's broken out into 4 different types of accounts. You have your tax savings account. So, again, that 15 to 30% of income, gross revenue that you're setting aside for taxes. Then you have profit. Usually, you could start with just as 1 to 3%, setting aside 1 to 3%, putting it into a profit account. You have your owner's pay, allocate yourself a wage. So again, these percentages, they can vary. You can change them, whatever works best for you, but putting a certain percentage aside for how much you should have collected and paid yourself. If you were paying a contractor or an employee, how much you should have paid yourself, putting that in a separate account. And then usually the last bucket or the collect all bucket would be your operating expenses. So the remaining amount would go in your operating expenses bucket. But basically, there's 4 accounts. So yes, you set up that business bank account and all your expenses will run out of that operating expense account. But then you have the tax savings, your owner's pay, and profit account. So allocating percentages to each one of those. And then no matter what, so let's say you have a $250 client, you're setting aside 20 to 30% of that into the health account or the tax savings account. 1 to 2% into the profit. Again, we usually say start the profit account small, but you could always increase this, making sure you pay yourself a percentage. So putting up, maybe it's 20% of that into there. And then the remaining goes into that operating expense category. So your monthly subscriptions, maybe it's part of the rent and utilities you have to pay, the oils or supplies you have to purchase, you use that for that operating account. But having your income when it comes in and separating out into those percentages is a good structure and strategy to help prepare yourself for those slower months. So maybe the income is not coming in like it did last month, but you still have that savings set up. So when those expenses occur, you can cover them.
Okay, great. So if we're talking to a woman who's scaling her bodywork business right now, before next tax season hits, what will make the biggest difference? Like, what's one thing she could do this year that's going to make the biggest difference for next year?
Yeah. Tracking your expenses accurately and correctly. So creating that spreadsheet, using that software, even if you have to use a personal credit card to start funding the business, still tracking those expenses on that Excel spreadsheet. Plus, if you have that business account, any expenses that come out of there. And then again, personal funds, if you have to put personal funds into the business bank account to have those expenses, do that and keep track of those. So really it'd be tracking those expenses from the very beginning to make sure you're not missing out on any tax savings there. And then just making sure you get your licenses, your insurance, and everything you need before you have that first customer walk through your door.
Okay, perfect. Do you think that someone who tracks all these things, like starting at the beginning of the year, is going to have a different outcome than the person that, like, in December, January, and February is like trying to think back to what all of their expenses were?
Yeah, so I would say yes and no. Some people, if they actually go through, like if they sit down in December and they go through their records,
Yeah.
maybe they will remember everything. But if you stay on top of it, I recommend to all my new clients sitting down once a month, going through the books, going through your expenses at least once a month. If you can do that and stay on top, you don't have to worry about that stress when it comes tax season. Oh my gosh, I have to dig through all my credit cards to figure out what was an expense and what was not. So staying on top of it, I think, is lessens the stress load, and you know accurately that you've kept track of all your records, as opposed to looking back at a bill in December at Walmart. You're like, was this a grocery bill or did I buy something?
Yeah.
So tracking those at least on a monthly basis, I think it sets you up better for the future.
Yeah, I agree too. And like you said, it can be just once a month you go through your statements and you're like, okay, this was this, and you have it all ready to go. Like, just imagine you closing out your books in December because you did this every month. And then you can just hand everything over to your accountant in January and get your taxes done so much sooner. I just feel
Yes.
like it feels so good. Like you're waiting on, people to send you your 1099s and stuff, but having that all done is the best. So
And I think
Okay.
that's another reason why people get so stressed out is they
Yeah.
have to go back through all those records and find those. But if you're on top of it, then you don't have that stress and you can actually enjoy the rest of the holiday season and the beginning of the new year.
Yeah. And if you've been in contact with your tax professional throughout the year, you already know what your expected tax bill is going to be. And likely you already have that saved. Because I think when you know what to expect, it's much easier to create that for yourself versus kind of being afraid of it all year. And so you overspend as a coping mechanism or you underpay yourself as a coping mechanism. And you can avoid that altogether if you just know your facts and data. And that just requires you to take that extra step of meeting with someone, asking questions, and having a plan for how you're going to handle it. That's all this is.
Yes.
And it's so
Yes.
much more enjoyable. I think you can still get stressed out about it, but the stress is different and you can solve any problem that you know you have.
Yeah, basically. And if you don't know you have it and then you're hit with a big tax bill, that can just cause more panic and more stress. So, yeah, just planning ahead of time, ask those questions when you need to ask those questions. And then, yeah, doing your books at least once a month if you can to stay on
Yeah.
top of that.
Okay. Do you have enough time to go over our bonus topics?
Oh, yeah.
Okay, let's hit them. So let's talk about home office deductions. Those are people who maybe, yeah, tell us how those work. Like, do you have to have your practice out of your home in order to do those deductions, or can you be doing admin work from home and take deductions?
You can do admin work from home, or you can actually have an office space where you actually do your body work in a room of your house. Now, to use this method, the IRS does not allow us to generate a bigger loss. So, to do a home office deduction, you do have to have net income of the business to take this deduction. If
Okay.
you have a loss, we can't generate a bigger loss. But
Okay.
if the business is profitable, there's kind of three different steps you can take for a home office deduction. There's the simplified method where it's $5 a square foot. There's the percentage of office space compared to actual home expenses. So maybe your mortgage or rent, your utilities, maybe you have internet, all those things. We would take the percentage you use for office space times your actual expenses. That would be your home office deduction. Then also there's the corporate rent strategy or the Augusta rule where you can actually have your business pay yourself a rent check. You don't have to pick up that rent income, but it is an expense at the business level. And that you utilize when you are more profitable. But having the home office deduction, talking to the tax professional to see if you could utilize that, and then being able to utilize it and put it in structure when you can.
Okay. And you can do that for both if you're renting a home or if you own it.
Correct.
Okay. Awesome. Okay. So some people are thinking about hiring employees or contractors. What does that trigger from a tax standpoint? What should people be thinking about if that's on the horizon?
Yeah, so contractors versus employees. Employees are you control how they work, when they work, so on and so forth. Contractors, they must control how they work. So there's two differentiating things there. But having contractors versus employees, having contractors is going to be the cheaper side for being a new business. You're going to pay them how much you pay them. You may have to issue them 1099s if you pay them more than $600 throughout the year, but you would just issue them that form and that's it. When you have a W-2, you also pay the self-employment taxes. So Social Security, Medicare, depending on what state you're in, there's unemployment insurance, disability insurance you may have to cover. So there's additional costs when you actually have employees. But when you go to hire someone, determine if they're going to be a contractor or W-2, having them fill out a W-9 if they're a contractor or a W-4 if they're an employee, and then just making sure you keep track of how much you pay them throughout the year.
Okay. Very interesting. Okay. I don't know a lot about health insurance deductions for self employed because I'm lucky and my husband covers our insurance. And then we also have military insurance. So, how do health insurance deductions work for self employed people? I'm just thinking about all the women breadwinners that are in my programs that leave their hospital jobs. And I think one of the hesitations to leaving is that they've got to then supply insurance for their family. So, do you know much about that?
Yeah, so the health insurance deduction, it can be 100% deductible, but the business has to have net income for it to be deductible. So you want to make sure the business is profitable, and then you can't be eligible for a spouse's employer plan.
Okay.
So you want to make sure that this is the only plan you guys can qualify for, but it can be 100% deductible if the business is making and generating that net income. There's also that marketplace health insurance where if you do have that, make sure you stay on top of the income you report to them. So how much they're covering of your premiums, because that's another big one that hurts a lot of people. And we're the bearer of bad news because we're like, oh, you have the premium repayment credit. Like you have to pay back how much they covered in premiums because your income was off. So throughout the year, if you have that marketplace insurance, just stay on top of the income you report to them so they're covering the right amount of premiums. So when we go to do the tax return, you're not hit with that repayment of that premium. So that can be another one that kind of
Is
scares
that
people.
a service that you guys in particular offer? Like you guys would be monitoring that throughout the year and letting people know, like, hey, you're about to hit this. Like you might want to send them a little more money or adjust this amount.
Yeah, so it's not really something we monitor just because we are not the health provider or the health insurance provider. But if we are doing the bookkeeping for your company, that we have that service at Insight. If we're doing the bookkeeping, every month you get your financials. So if you realize like, oh, in April, like, oh, my income's higher than what I've reported, go back to your health insurance provider, tell them like, hey, my income is rising to about this every month. Have them adjust that so your premiums also get adjusted.
Okay. Good advice. Good advice to stay on top of that. Okay. We touched earlier on retirement accounts, SEP IRA and solo 401k and why starting, can you tell me like what are the benefits of having these? Can you have both at the same time? How does this stuff work?
So you can have both at the same time, but there are contribution thresholds. So as soon as you put enough money in one, you may hit that threshold and can't put it into the other one. One of the big differences, the SEP IRA, you can do as a sole prop. So still having the sole prop Schedule C on your personal tax return. The solo 401k is for when you have that S Corp. You can create the solo 401k account, and then you, as the employee and employer of that company, get to contribute to that.
Okay.
But also, if you have a spouse, you can add them as a part shareholder, and you can actually contribute and open an account in their name as well as the employee employer. So when the business is generating that income of 100K profit, you can open those accounts for you or your spouse and contribute the max you can into those to set up for your future.
Okay. Very good. Very good. Let's talk about qualified business deduction and whether it applies to service-based bodywork practices. Can you talk about the qualified business deduction? Yeah,
so the QBI, qualified business income deduction, it was put into the tax code back in, I think 2020. But this allows small businesses to take a portion of their income, reducing their taxable income. So it's 20% deduction based on the net income. So if your net income is 100,000, 20% of that, so 20 grand, is reducing your taxable income. So it's a great deduction. Now, there is the specified service trade business where maybe some of your practitioners, if they have the degree, if they actually do skilled therapeutic body work, they qualify for the specialized service trade that has different income thresholds as opposed to maybe someone who does more spa related or just general wellness therapy. They qualify for the normal QBI income limitation. So there are some income limitations, and depending on what your specific line of therapy, you may be a specified service or you may just be the normal QBI. But
how do you find out?
Yeah, consulting with your tax professional.
Okay.
They're going to be the ones to be able to give you like, oh, based on your line of work, you are a specified service provider, and they could go over those income limitations with you.
Okay. Very cool. I've never heard of that one before. And I imagine that many, many people listening to this and many, many people in my programs would be considered specialized. So that's very cool. But you do have to ask someone. You can't just anoint yourself as specialized and take the deduction without.
Yeah. Well, I mean, no matter what, if the business is profitable, everyone who has a small business, they could qualify for this. Again, they're limited based on how much income it is, but no matter what, it will be generated on the tax form.
Okay, very
or
good.
it should be if you're
Yeah.
using the right person.
Okay. What else can you tell us about how people could contact your company, what services your company offers, and how they could get a hold of you for more information?
Yeah, so most of you are incredible at what you do, but moving from a regular paycheck to running your own practice can feel like a nightmare. You're working hard, but you feel like the IRS is it just helping themselves to your bank account. It doesn't have to be confusing. We have a super simple guide called Self Employed Taxes Explained, which will be in the video notes. But this is going to be a PDF where you guys can read through it, go through it, see what all the information is. It breaks down math in plain, simple English and shows you how we've helped people find at least $7,000 in tax savings just by having a better plan. You can grab it at the free link below in the show notes. And then if you're ready to have a tax professional or just hand over the stress to a tax pro, please reach out to our link. We do have a booking link that will also be in the show notes where you can reach out and speak with our sales team and they could get you set up with the right tax professional. And we could go over your situation, answer any questions you might have, and help prepare for the 2026 tax year.
Awesome. Thank you so much. I think this is really good just to expose people to what's possible and what services are available, whether they decide to go with you or not. I think just downloading that freebie that's going to be available in the show notes, filling it out, and then it doesn't hurt to have a conversation with your team to see if it's a good fit and to go over the costs of doing that, which are all a write off, I'm assuming as well.
Yeah, correct. They are a write off. But again, yeah, you're right. Just shopping and asking those questions. So book that meeting with us, have that consultation, see
Yeah.
how we can help you. You can also go elsewhere and compare prices, ask one of your friends, but going over, asking all the questions you can to help set yourself up for the best future for your business.
I love that so much. All right. Well, thank you so much for your time today. Everybody, all of the links to all of these goodies are going to be in the show notes. Is there anything else you want to say before we wrap up?
Just make sure you're tracking your income and expenses, guys. That's a big
Yeah,
one that I get a lot of stress from a lot of clients is they're overwhelmed because they haven't been tracking it. So just track your expenses. Again, if it's just once a month, but keeping records of those, it'll help in the future.
great advice. All right. Thank you so much. And
Thank you,
everybody
Heather.
else, we'll see you next week on another episode of The Fully Booked Therapist. Bye for now. Thanks for spending this time with me today. If you're a hands-on therapist who is ready to get fully booked and build a practice that actually pays you, I want to help you do that. Head over to heatherhummel.com to find out how we can work together. And if you loved this episode, please share it with someone who needs it. See you next week.